It's no surprise that the housing market is still blowing up and property prices just seem to continue to get more and more inflated, which continues to fuel the big question: when is the bubble finally going to pop? So today we're going to be talking about what exactly is going on in the real estate market, why it seems like maybe it's starting to turn for the benefit of the home buyer, where we're going into the fall and towards the end of the year, and how you can take advantage to make some more money, and finally, why it's so important to blow up the like button until it turns blue. Now, to better understand where we are, we have to analyze where we came from. Now, for that, we have to go back all the way to 2011, which to me was the beginning of the recovery of the last recession.
Was the worst day on Wall Street since the crash of 1987.
Now, since 2011, the housing market has increased every single year without a sign of a slowdown. Now, we finally arrived to 2020 and we know exactly what happened. Well, the COVID pandemic rocked the world and basically we all expected for the economy to take a dive. Massive layoffs, people not working, millions of people in unemployment, millions of homeowners potentially going into foreclosures. Anyways, during this whole time, home builders paused building new homes for several months, while at the same time they experienced labor shortages. The cost of construction materials went up, specifically the cost of lumber went up about 377% from 2019 to 2020. And while everyone was still waiting for the economy to drop to the bottom of the ocean, millions of people that were living in the city decided that it was time to move to the suburbs. Now others figured that they would need to work from home indefinitely, entertain from home while the world is shut down, and move into, well, larger homes. Now, I already mentioned that there hadn't been a single correction in the real estate market since 2011. So this meant that for millions of homeowners, they now have more equity in their homes than ever before. Thereby selling their homes and cashing out on their equity meant that they could now afford bigger and bigger homes. Now, at this time, the unlimited ammo of Jay Powell and the Federal Reserve decided that it was time to keep the show afloat. I actually mean the economy. And by doing so, they decided to lower interest rates to nearly 0% by buying billions and billions of dollars of bonds and mortgage-backed securities every single month, which to this day they're still doing so. Now, with equity positions all the way up here and mortgage interest rates all the way down there, this basically meant that real estate was going to even experience a much bigger boom.
Boom, bam, bop.
Now, this obviously meant that now people are being priced out of the market. There are people with a ridiculous amount of money that still can't buy a house, which obviously meant that at some point people were just going to start giving out ridiculous offers, like for instance, buyers naming their firstborn child after the seller, or giving season tickets as part of the offer, or even some properties pretty much selling for over $1 million over the asking price. And now this leads us to where we are right now. Well, surprisingly, sales have actually slowed down for 2 months in a row now. Pending home sales fell again in July by 1.8%, while contracts fell by about 8.5% year over year. Now, at the same time, total housing inventory increased for the 6 months straight this year, which is actually really good, to about 1.32 million units. Even though that's a good thing, still inventories are about 12% lower than they were about a year ago.
I was very sad to see that.
Another thing that happened is that builders, well, they still continue with construction, but at this very moment, that might not actually be going as fast as we want for prices to slow down, because now there are several signs that the market for newly built homes are coming into a potential slowdown as well. For instance, building permits, which are basically a leading indicator of future constructions, fell for more than what was expected back in June to the lowest level since August of 2020. And we're about 100,000 units below the 6-month average. In addition to that, mortgage applications to purchase newly built homes dropped by about 24% back in June, year over year. Now, this means that more and more home buyers are not necessarily rushing into newly construction home as much as they were towards the end of last year and even the beginning of this year. This could be for a lot of reasons, but the main one is that obviously home prices have just gone up way too high, way too quickly for a lot of home buyers, and they're pretty much priced out. Now, on the mortgage side, mortgage interest rates are still very low, and they have actually decreased over the last 3 months or so, which actually helps those who need financing to still be able to lock in into low interest rates and still be able to sort of keep a low monthly payment on a home that they could potentially not even qualify for if rates were higher. But now that we know all this, what exactly is causing sales to actually go down? Well, home builders are coming across a lot of issues, specifically pricing issues with construction costs, labor costs, building materials, you name it. There's still a lot of hurdles for builders right now, which obviously is impacting their ability to raise production. Now, in addition to this, even though there are more listings on the market right now, we are coming across what we call greedy sellers. And basically, these are just sellers who are pretty much wanting to get a whole lot for very little house, and they're not giving in. So unless you're living under a rock or inside of a cave somewhere, you know that the real estate market has completely gone out of the stratosphere, and sellers obviously know this. So it's pretty much come to one of those things where, well, if you want me to move, then you gotta make it worth my while. But then you have those potential sellers who are still very scared to sell because, well, they have honestly no other place to go because most of the listings are pretty crappy anyways. And a lot of people that bought a home back in 2015, 2016, and so on, they also probably have very good interest rates on the mortgage, or maybe they are taking advantage of refinancing options, possibly taking even advantage of refinancing options that allow them to draw some cash, do some renovation work into their homes. And so basically the whole thing about moving into something new is just not necessarily that worth it for them, even though they might actually be willing to move if the market was a little bit more stable. And finally, we come up to kind of what we call buyer fatigue. And this is basically when buyers just pretty much had enough of the whole market.
I'm tired.
There have been so many stories of home buyers just basically submitting 50, 60 offers and not being able to land any of them. This has pretty much happened basically anywhere across the country. And just the buyers are just saying pretty much, you know what, I'm just gonna go ahead and rent one more year. So be it. We'll just go ahead and wait just one more year anyways, and this whole show might actually come to a halt, and it's going to get a little bit better for us.
Absolute insanity.
So as we seemingly hit a ceiling in a lot of markets, what may actually happen towards the end of the year as far as home prices go is one of the biggest questions in the economy right now. Now, first, we're expecting mortgage rates to continue to be very, very low. Possibly not as low as they are right now, where you can pretty much fetch a 30-year fixed rate mortgage well under 3%. But even with the Fed expecting to cut back on asset purchases towards the end of the year, we are expecting rates to increase sort of in the mid 3% range, or even to the high 3s, maybe towards the end of the year around December or even beginning of next year. Now, movement in interest rates to the upside will definitely affect people's affordability. For instance, if you have a $500,000 loan at 3% versus 3%, well, a $500,000 home with a 3% interest rate will have you with a monthly payment of about $2,108 every single month, whereas a 4% interest rate on that same loan balance will give you a payment of about $2,387, which is a difference of about $280 every single month. Now, there are also going to be several factors that we're going to be watching out for towards the end of the year. The first one, and probably the most spoken one, is the rental moratorium that ended this past month, and what kind of an effect is going to have on the real estate market. Now, I know a lot of people think that the market is going to crash because all of a sudden there are going to be all of these houses in foreclosure. But honestly, guys, that's not necessarily true. In fact, loans and forbearance have been decreasing almost every single month. And right now, there are about 1.6 million homeowners in forbearance. And it's expected that a lot of these people that are in forbearance right now are going to be getting into loan modifications. And basically what happens with a loan modification is that the mortgage lender modifies the existing loan to make it more beneficial for the homeowner, or maybe not necessarily more beneficial, but just they'll basically just work out the terms so that the monthly payments get a little bit better for the homeowner. That could be in the means of maybe even extending the loan to 40 years, which obviously is going to decrease the monthly payment, or maybe even possibly dropping the interest rate even further, or maybe even giving them a special type of home refinance where they will take it from a higher interest rate into a lower rate. In fact, according to my friend Tony, the Mortgage Bankers Association Senior Vice President and Chief Economist, said that we expect a sharp increase in forbearance exits over the next month as many borrowers reach the 18th month mark and see their forbearance plans end. For those borrowers who have exited in August, the majority either enter in deferral plans or obtain modifications. Now, the second thing that we are still obviously dealing with is the huge shortage of supply, and right now we are still about 1.5 million houses under supply.
No, God!
And guys, basically the real estate market, we have two types of sellers right now. Basically, we have the mom and pop that are pretty much scared to sell because of the lack of inventory. And then we have builders that are pretty much cutting back on supply because they obviously don't know what is going to happen, the cost of materials, the cost of labor, and how they can actually keep up with the whole demand. Okay, so how can you actually profit from all this so that you can make some money in real estate? Okay, so first and foremost, if you were looking to purchase a home, whether it was your primary or an investment home, whether it was this year or last year, and definitely even the springtime this year, maybe you just got tired of getting outbid left and right by other offers, and you were sort of kind of like waiting for the market to take a little bit of a breather. This might actually be the very best time. At least to me, this is the best time over the last 14 months or so. Now, the second thing that I will be doing as a buyer is that I'm going to be a little bit more proactive. And a lot of you guys, especially if you are being represented by a real estate agent, what you do is that you just sort of sit back, relax, and let your realtor find listings for you, whether it's by the means of sending you listings via whatever MLS system. And you just look at them on your phone, and that pretty much is about it. You know, schedule your showing, so on and so forth. But if I'm looking to buy a home, and this not only goes in this market, but just basically any market, is that I'm going to be a lot more proactive, meaning that I'm going to be looking for opportunities. And these opportunities may show by looking for people that were trying to sell their homes last year or maybe beginning of this year, and they didn't end up closing. There's gonna be a reason for that. So what I will be doing is that I will reach out to those people directly, or maybe just have even my real estate agent reach out to those people directly and just see if maybe they're still trying to sell their homes. And maybe, who knows, now you have somebody that was not really, they didn't have the home listed. They might just want to listen to your offer, and then you can just go from there. Now, the third thing that I will definitely do, and this sort of goes piggybacking on the last one, is that I will be hitting up people that are trying to sell their homes by themselves. It's kind of what they call FSBOs, for sale by owners. And for sale by owners, it's just basically if I'm on this apartment that I live in and I'm just gonna try to sell it on my own, then I'm just going to be listing it by myself. A lot of people that are not in the real estate business, they have absolutely no idea on how to list a home. They don't know if they are actually pricing it right. They don't know what kind of things need to be done to the property to actually price it better. And so basically they're a little bit out of reality. And a lot of people that try to sell by themselves, they're doing it right now because they know that the real estate market is hot. So they think that they can actually save even a little bit more money by trying to do it themselves instead of getting a listing agent. But one thing that ends up happening is that, well, they probably didn't price the property right. It's just still sitting in the market. And once it stays on the market for 30 or even 60 days, then a lot of people just feel like there's something wrong with the property. And these, for sale by owners just don't really have the necessary experience in order to deal with that situation. So that's definitely a subset of people that I will totally be hitting up if I was buying a home right now. All right, that's pretty much it, you guys. Thank you so much for watching the video. Let me know what you think about where the real estate market is going to go based on what you're seeing in your area. And if you have any questions or anything, just put it down in the comment box below. And once again, thank you so much for watching the video, for your support. And I will see you in the next one. Consider subscribing, and goodbye for now.